wealth. But appreciation is unpredictable. It's influenced by interest rates, supply and demand, economic cycles, even the way social media makes people feel about buying. You can't control it. What you can control are the steady, mechanical, and guaranteed ways that builds your financial foundation. The principal paydown, inflation protection, tax benefits, and the long-term cost stability. These are 4 quiet engines that make owning a home one of the most powerful wealth tools in America, even if prices never moved a dime. Let's start with the first one, principal paydown, or the hidden savings account. When you make a mortgage payment, part of it goes toward interest and part goes toward principal, the actual debt you owe, right? In the early years of a 30-year loan, it feels like you're barely touching the balance. But that changes faster than people realize. So take that $203,000 home right here in the Joplin area with 10% down, and let's say you're financing $182,700. At a 6.2% interest rate, your principal and interest payment lands right around $1,120 a month. Add $300 for taxes and insurance, and you're roughly at $1,420 a month total. Now compare that to renting the same house for only $1,350 a month. On paper, renting looks a little cheaper. But let's zoom out. In the first year of that mortgage, about $3,000 to $3,500 of that payment goes straight toward principal. Equity that's yours. By year 5, that number grows to around $5,000 a year. Over 10 years, you've paid down more than $50,000 of debt, even if your home never increased in value. That's $50,000 in forced savings. You didn't have to remember to transfer it to your brokerage account. You didn't have to fight the urge to spend it. You just lived your life, paid for your housing like everyone else. The difference is part of your payment actually went back to you. Let's compare that to renting for the same 10 years. At $1,350 a month, right? $1,350 a month, you spent $162,000 in rent. You walk away with nothing to show for it, except maybe a few nice memories of where you lived. Even in a world of zero appreciation, the homeowner is still ahead just by the amount of principal they've paid off. Which brings us to inflation, the silent advantage. See, here's where ownership becomes even more powerful. Inflation quietly raises the price of everything around you. Groceries, gas, insurance, but not your fixed mortgage payment. That same $1,420 a month you pay in year 1 is still $1,420 a month in year 15. The dollar doesn't just buy as much, so while everyone else's rent climbs, your housing costs stay flat in nominal dollars and shrinks in real dollars. Over the past decade, rents in Joplin have risen about 25 to 30%. That means that a $1,000 rental in 2015 costs around $1,300 today. Project that forward, if we see similar inflation, that $1,350 a month in rent could easily hit $1,700 in another 10 years. Meanwhile, your mortgage payment, it doesn't move. Every year, the cost of your house actually relatively becomes cheaper and your disposable income grows, even if your salary stays the same. That's one of the most underappreciated benefits of owning. It's a built-in hedge against inflation. Let's talk taxes and the real return on investment. Homeownership comes with tax advantages that most people underestimate. Mortgage interest and property tax deductions can reduce taxable income for those who itemize. More importantly, when you sell your primary residence, up to $250,000 of profit per person or $500,000 for a married couple is tax-free under current IRS rules. Consult your CPA or your tax accountant for sure. But even without appreciation, homeowners often use those deductions to keep more money in their pockets each year. That's cash flow. And when you finally sell, the equity you've built through principal paydown is yours, free and clear with no capital gains on the first $500,000. Again, talk to your CPA. That's not speculation though, that's strategy. Now, what about the emotional return on investment? Let's kind of step away from the spreadsheets. I love them, but let's step away from the spreadsheets for a second. The biggest advantage of owning your home isn't just on a calculator, it's in your mindset. See, owning creates stability. It anchors you to your community. It lets you control your environment. You get to paint the walls. You can plant the trees, build the deck. That sense of control and the pride often spills over to other areas of our lives. People who own homes tend to save more money, they vote more, they invest more. It changes how they see themselves. When you rent, you're living under someone else's terms. When you own, you set the terms. That shift in mindset from temporary to permanent, from reactive to proactive, it's one of the most powerful wealth building forces there is. So let's pull this together for a minute in a real comparison, comparing 10 years, renting versus owning. So scenario one, you rent a home here in Joplin for $1,350 a month, and your rent goes up 3% a year, just 3%. Scenario two, you buy a home, $203,000 home, with 10% down, 6.2% interest rate. Okay? After 10 years, the renter has paid roughly $183,000 in rent. They've built no equity, and their payment is now around $1,750 a month. The homeowner, on the other hand, has paid $170,000 in total housing costs, but they've also paid down about $50,000 in principal. Their home is roughly the same value, $203,000. Remember, we're figuring no appreciation. Even if we subtract the selling costs, they still walk away with tens of thousands of dollars worth of equity. Now imagine if home prices do rise, even modestly, say 2% per year like we've seen locally in the past. That's $203,000. That $203,000 home would be worth around $247,000 in 10 years, adding another $44,000 in equity on top of what you've already paid down. See, that's the quiet miracle of ownership. It works even when the market's flat, and it compounds when the market's growing. With all that said, what are the real risks of waiting? A lot of people hesitate to buy because they think, well, what if prices drop, right? Everything's inflated, or what if I buy at the wrong time? The greater risk isn't buying at the wrong time. It's not buying at all. Because while you wait for the perfect timing, rent keeps going up. And every month that passes is another month where you're helping someone else pay down their mortgage instead of you paying down your own mortgage. And even if you bought today and home values just stayed flat for the next 5 years, you'd still have thousands in equity through your principal pay down. And if rates do fall later, you can always refinance. But you can't rewind and recapture lost time in the market. That's the thing you can't get back. So the people who win with real estate aren't the ones who time it perfect. They're the ones who stay in it long enough for the math to work in their favor. Again, the people who win in real estate, they're the ones who stay in it long enough for the math to work in their favor. See, we want to look at home ownership as a long-term wealth strategy. If you zoom out on every major study of wealth in America, the pattern is clear. Homeowners consistently have net worth levels several times higher than renters. It's not because they're smarter than investors. Trust me, I'm a homeowner. I'm not the smartest guy out there. But it is because they've used housing as a savings vehicle. Or it can be because they've used housing as a savings vehicle. The Federal Reserve's most recent survey of consumer finances shows that the median homeowner's net worth is about $396,000, while the median renter's is around $10,000. That's a 39-to-1 difference. Again, that's not all from appreciation. It's from disciplined automatic equity growth and cost stability. Even if appreciation here in Joplin and the surrounding area stays at this modest 2% a year, with steady growth compounded with your principal reduction, puts you in a dramatically different position 10, 20, even 30 years from now. And this mindset matters in 2025. We're currently living through a slower market. After the frenzy of 2020 and 2022, it's easy to feel like real estate has lost its shine. But this calmer phase is healthy. It's an opportunity to buy without panic, to focus on the fundamentals, location, affordability, and long-term goals. Joplin's market, sitting around a median price of $203,000, remains one of the most affordable in the Midwest. Inventory has risen slightly, days on the market hovering around that 50 to 60, and mortgage rates have dipped from their highs. That combination means buyers have more breathing room and sellers really still have solid equity. This is what balance looks like. And balance is the environment where thoughtful decisions pay off the most. All right, so let's bring this home, no pun intended, with some perspective. Let's extend our view to 30 years, the lifetime of that mortgage. If you never moved, never upgraded, and your home never appreciated, you would still end up owning a $203,000 asset free and clear. Your monthly housing costs at the end of the period would be just taxes and insurance, say maybe $300 or $400 a month. Meanwhile, the average renter in 2055 will be paying 2 or 3 times today's rent just to stay even with inflation. And that's the ultimate difference. Ownership gives you an exit from the cycle of rising costs. It gives you a foundation that stays constant while everything else inflates. That's not speculation, that's financial freedom. And that's not even counting the emotional finish, right? That emotional return on investment we mentioned earlier. If you've ever doubted whether buying a home was worth it in a slower market, remember this. Every mortgage payment you make is quietly transferring wealth from your future self to your present stability. It's the only investment where you can sleep inside the asset you're building. You're not just buying a house. You're buying predictability. You're buying the ability to stay put when rents rise. You're buying the space where your kids will grow up. Your holidays will happen and your memories will live. And even if prices never go up again, every month you own, you're building something that renting can never replace: stability and freedom. So here's the bottom line. Appreciation is nice, but it's really not required. The real value of owning a home comes from the consistent, quiet math, paying yourself first, month after month after month. If you'd like to see how that math plays out for you in your own situation, or you just want to talk through your next move in the Joplin, Carl Junction, Webb City, Carthage, Neosho, the surrounding areas, text me at 417-439-7721. I'll help you look at the numbers, not the noise, so you can make confident, data-driven decisions that build real wealth. I'm Jonathan Lundy with the Lundy Group Real Estate Team, and this has been What If Home Prices Never Go Up Again. Thanks for watching, and I'll see you in the next one.